Hi students, welcome to the video on financial accounting. The most important topic is learn single entry system of accounting in 2 hours. Here we should know what are the topics to be covered, a glimpse of the topic. First, we'll discuss about single entry system or incomplete system of accounting, definition, then what are the features or characteristic quality, then uses and advantages, then also limitation, then classification, then difference between double entry system versus single entry system, then calculation profit by applying, there are two methods for calculating the net profit or net capital. First, statement of affairs or Networth or capital composition method. Second, conversion method or final account method. Then we will discuss what are the difference in balance sheet and statement of affairs, some missing information source discovery, and practical problem and its solutions. So first, single entry system of accounting is a basic and informal method of recording business transaction. It only tracks one side of a transaction, usually cash inflow and cash outflow, that is receipt of cash and payment of cash, rather than recording both debit and credit. No other ledger accounts are prepared excepting personal account, that is the date list of debtors and creditors or suppliers. So no record of nominal and real account is maintained under this system of accounting. So it is adopted by very small concerns, that is small trader, petty shopkeeper, professionals like doctors, advocates, then clubs, associations, educational institutions like this. Even individuals, sole partnership, they use the single entry system of bookkeeping, but limited company cannot use this system of accounting. They have to follow the double entry system of accounting. So it is an admixture of single entry, double entry and no entry system, because single entry in respect of such transactions such as cash purchases, cash sales, expenses paid, fixed asset purchase, etc. Double entry in respect to certain transaction, that is cash received from debtor, cash paid to creditor, because it is recorded both in the cash book and also in the debtor and creditor accounts. That's why double entry is completed in respect of this. No entry in respect of certain transactions such as depreciation, bad debt, provision for bad debt, it is not taken into account. So in not say, single entry method of recording the transaction is an incomplete, inaccurate, unscientific and unsystematic style of maintaining the accounts. So forms of accounts from incomplete record of single entry system past pure single entry system, means only personal accounts of debtor and creditor are maintained, no record of real or nominal account. Second is simple single entry system. Here personal accounts of debtor, creditor, cash book, that means cash account is only maintained. So posting from cash book is made on the personal accounts only. Then quasi single entry system, that means it record personal account, cash book and some other subsidiary books. So whatever that may be, it is an incomplete record. So we will discuss what is single entry as defined by Kohler. So according to Kohler, single entry is a system of bookkeeping in which, as a rule, only records of cash and of personal accounts are maintained. Personal account means debtor accounts and creditors account. It is always incomplete. Double entry varying with the circumstances. According to Arthur Fieldhouse, single entry is faulty, incomplete, inaccurate, unscientific, unsystematic style of account keeping. For this reason, it is called accounting from incomplete records. What are the features or quality or characteristics of single entry system? First, maintenance of personal accounts. No real and nominal account is maintained on the single entry system. In some cases, cash book and other subsidiary books are also maintained or prepared, just like quasi single entry system I discussed. Then suitability. It is only suitable for small business, that is sole trade business, partnership concern, but limited company cannot adopt this system of accounting as legal requirements. There is flexibility. So recording procedure under account from incomplete record can be adjusted according to the information needs of a particular business enterprise. Suppose a small business, a club, an association, an educational institution, so they needs some personal record of some personal accounts and cash book for running their business or running their organization. Then on systematic recording, there is no systematic method of recording because cash transactions and personal account transactions are recorded. There is no scope for recording revenue, gains, expenses and losses. Then dependence on vouchers. As it is not complete it is not based on complete double entry system bookkeeping, so any assets or any item we will show in profit loss account and balance sheet, we will take the help of voucher, which is the authentic proof that the cost of asset is that, then accordingly we have to record. Because for ascertaining profit loss other information, voucher is absolutely necessary in case of single entry system of bookkeeping or accounting from incomplete records. Then no preparation of trial balance. The absence of record of twofold aspects of every transaction, it is not possible to prepare trial balance and check the arithmetic accuracy of books of accounts. Then no uniformity. The account from incomplete records is a mixture of single entry, no entry, and also the quasi single entry system that we already discussed. Then accounting is done according to convenience and information, determination of information. Then determination of profit loss is very difficult, means it is just an imaginary estimate, but it will not give you the complete picture, actual picture. Then what are the uses and importance of single entry system of bookkeeping? First, suitability. This system is very much suitable to small organizations because expert knowledge is not essential to maintain accounts under single entry system. Second, inexpensive. This system is less costly because there is no need to appoint an accountant to maintain accounts. So transactions in a small organization are very few, which can be recorded by proprietor itself. Then simplicity. Due to simplicity and lack of rigidity, only one can maintain it without any adequate knowledge of accounting. Then limited accounting what? A limited number of accounts have to be opened under this system since the transactions relating to cash book and personal account debtors and creditors are only to be maintained. Then tax evasion. So this system is very convenient for the businessman to evade tax. So sometimes the system is purposefully adopted to deceive the taxation authority. According accounting for an event. So only in case of some events like social function, academic event, festival, this type of single entry system is only useful. Then nothing in the world is unexpressing. It has also certain limitation, fast, unscientific and unsystematic that we already discussed. The entry is unscientific and unsystematic of recording financial transactions. It does not have any set of fixed rules and principles for recording or reporting the financial transactions. Second, it is an incomplete system. Single entry system is incomplete system because it does not record the true aspects or accounts of all the financial transactions of business. It does not maintain any record of the transactions relating to the nominal account and the real account except cash account. Then difficulty in checking arithmetical accuracy. So from the trial balance we can know the arithmetic accuracy of books of account. A trial balance cannot be prepared under single entry system, then arithmetical accuracy of the books of account is not possible. It increases the possibility of more errors, frauds and misappropriations. Then difficult to ascertain true profit. True amount of profit or loss cannot be ascertained because it does not maintain the nominal account. It also does not reflect true financial position of the business. In the absence of true figures of profits and correct information about assets and liability of the business, the balance sheet cannot be drawn up. Hence, true and fair view of financial position of the business cannot be ascertained. The difficulty in ascertaining gross profit, as we do not have knowledge about a proper record of sales and purchase, then it is not possible on the part of the business to prepare a trading account from which we can ascertain the gross profit or gross loss of the business. Then lack of statistical data. The complete record of all transactions is maintained, hence useful statistical information about the business cannot be obtained. For example, trend of increase or decrease in sales cannot be obtained. Even comparison of intra-firm, inter-firm. Intra means inside the firm, inter-firm means of similar nature of business. From year to year not possible because of lack of statistical data. Then frauds and errors. There is always a possibility of committing frauds and errors in the books of account. Then unacceptable for tax purpose. Since proper record of sales and profits of the business are not maintained under the single entry system, the proper assessment of sales tax, income tax not possible. Even income tax authority do not rely on this incomplete system of accounting. Then calculation of profit from incomplete records first. The single entry system is really no system at all for keeping accounts. Under this system, only such accounts are kept as seem to be absolutely necessary. Usually accounts that are kept are those relating to cash, credit customers and creditors. One may not find accounts relating to fixed asset, purchase, sales, expenses and income which are very important or relevant for any business concern. Thus, one may find some transactions are not recorded at all. Some transactions are recorded only in one of their aspects. This double aspect is not taken into account, while for some other both the aspects recorded. So, goods sold on credit will be recorded only in the account of the customer concerned. Cash received from him will be recorded both in the cash account in the account of the customer. So, purchase of machinery on credit will not be recorded at all till payment is made. So, this system of recording is very defective. No trial balance can be taken out. Hence, accuracy of books cannot be proved. So, chances of mischief or fraud remaining undetected are very high. Trading profit and loss account cannot be prepared. Hence, the proprietor will have no firm idea of profit earned or loss suffered. So, balance sheet called statement of affairs that is prepared in an unsatisfactory manner. Assets and liability are one proved from records what are put down by physical inspection and estimated basis. Once the organization will prepare the statement of affairs showing assets and liability, then definitely the auditor, they have to rely only on sufficient proof supporting the documents of those assets and liability and expenses. Though system is quite popular with a small firm which cannot afford to spend money on proper accounting. Then we will discuss what are the points of difference between single entry system and double entry system. First, information. All of you know single entry system is an incomplete record of accounts, but double entry system provides complete financial information as both aspects of a transactions are recorded. Then cost. The accounts are maintained in less or cost is so very low as no accounts maintained in a systematic manner. Then double entry system is costly method and recording of transactions are made based on the double aspect system. Accounts. In case of single entry, only personal account maintained, and for real and nominal account not maintained, excluding one cash book is maintained. Then under double entry system, all types of account, whether it is personal account, real account, nominal account, are maintained or prepared. The knowledge of accountancy principle. Any individual can keep accounts according to choice and convenience. So no accounting knowledge essential. But experienced accountants are required to record the transaction under double entry system of bookkeeping. Then trial balance. Trial balance cannot be prepared because of incomplete information of accounting. So arithmetical accuracy of books of account cannot be maintained or verified. But under double entry system bookkeeping, trial balance can be prepared. Therefore, arithmetical accuracy of books of account is verified. Then profit and loss account. Profit and loss account is not prepared to find out the net profit or net loss. In case of double entry system, profit and loss account is prepared to find out the net profit or net loss. Then financial position. Under single entry system of bookkeeping, only statement of affairs is prepared. Balance is not possible. But under double entry system, only exact financial position can be ascertained from the balance sheet. Then utility. Single entry system is only useful to small business concern, whereas double entry system is useful for all types of business concern. Then authenticity. Government authority do not consider this system as authentic, but under double entry system, government authority is considered as very authentic. Then preparation of single entry system. So the following points should be considered while preparing statement of affairs. First, cash book should be balanced and physically whatever the cash balance shown as per the single entry system of accounting, then it should tally with the physical cash in hand of the businessman. That means the cash book should be balanced, cash in hand should be verified with the balance. Second, bank reconciliation statement is prepared to reconcile the cash book and passbook balance in order to ascertain what is the correct or accurate balance of cash at bank. Then the list of debtors and creditors should be prepared from personal account maintained in the ledger. Stock in trade. So stock, whatever the stock, it should be physically verified and should be taken and valued at cost or market price, whichever is low. Value of fixed asset should be ascertained only from authentic vouchers or the other available sources after providing depreciation. All outstanding expenses, accrued income should be considered, should be in the statement of affairs, should be shown in the statement of affairs. Similarly, all expenses paid in advance, all unexpired income or income received in advance should be considered while and shown in the statement of affairs. Other specific assets and liabilities such as bills received, bills payable, loan from bank, other sources, etc. should also be taken into consideration. Finally, the exceed of assets over liability should be taken as capital of the proprietor on the date when the statement of affairs is prepared. So, we have already discussed there are two methods for preparation of knowing the capital and net profit of the business. One is statement of affairs or net worth or capital composition method. Second is conversion method. From conversion method, we can ascertain the profit and loss of the business and the balance sheet portion of final account we can prepare by making so many adjustments. Then, how we prepare the opening and closing statement of affairs. First, preparation of statement of affairs. So, closing, when in case of statement of affairs, whatever the items given, we have to arrive the capital on the opening date by taking the assets and liability on the opening date, and instead of preparing the balance sheet, we will prepare a statement of affairs which is similar to balance sheet to ascertain the opening capital first. Then we will prepare a statement of affairs for closing capital. So from closing capital also assets and liability will be given, so we have to prepare the closing capital. Then we will adjust from closing capital. First is opening statement of affairs we have to prepare. So first method, statement of affairs or net worth method, we are giving emphasis now, because under CBSE or Council of Higher Secondary Education for 11th or 12th students, this conversion method is not in the syllabus, it is in the +3 commerce course. So first we will complete this, then we will go for conversion method. So for calculation of statement of affairs or net worth or capital comparison method, we have to first know what is the opening statement of affairs. Opening statement of affairs. Then we will prepare the closing statement of affairs. Closing date. Closing statement of affairs. Then we will prepare statement of profit or loss. Statement of profit and loss. First, for opening statement of affairs, suppose opening statement of affairs you will calculate 1st April, suppose 2023. Then closing is on 31st March 2024. The net of statement of profit loss for the year ended 31st March 2024, that we have to prepare. So we will discuss from the question given in the book. So here it is given. So what we will do? We will prepare a statement of affairs on the opening date. We will prepare a statement of affairs on the closing date. From statement of the opening date, we will calculate the opening capital. From closing statement we will calculate the closing capital. So we will take the base as closing capital. So closing capital, that is capital at the end of the year, first we have to calculate. Capital at the or beginning of the year, at the end of the year, that we have to calculate. Suppose the capital at the end of the year, it is given 1,50,000. Then opening capital is given 90,000. Closing capital is given. Then opening capital at the beginning of the year is 90,000. This is given. Then drawing is given. Drawing during the year. What the proprietor withdraw for his personal use, it is also given. So drawing is given 15,000. And proprietor introduced additional capital in the business. Additional capital in the business. Or during the year. So it is given 10,000. So we have to calculate the net profit. So first you see your closing, you will base the closing capital first. Closing capital or capital at the end of the year. How much it is there? It is 1,50,000. You have given a drawing. Drawing means the proprietor withdrawn from the business. If the proprietor would not have withdrawn, then the closing capital would be more. So you will add drawing, because due to drawing the closing capital is decreased. So drawing will be added here. That is 1,65,000. There is additional capital of 10,000. If it could not invest it, then the closing capital could be less. So less additional capital introduced during the year. Then additional capital. So we will get the adjusted capital. So 1,65,000 less 10,000. Your additional capital. So adjusted closing capital is 1,55,000. Then opening capital is given. We will minus the opening capital, get the net profit. Minus opening capital. So opening capital is 90,000. So 1,55,000 minus 90,000. So 65,000 is the net profit. This is the net profit. It will be shown or added to the capital on the liability side. Okay. This is all about your calculation. Then we will solve some problems, important problems covering maximum adjustments. What are the maximum adjustments that I will discuss now? So additional, I already discussed, closing capital is given, drawing is given, additional capital is given. So first we have to calculate the adjusted capital. So what is the closing capital? It should be taken as the base. Closing capital at the end of year. So it is given. Then drawing. Drawing means what the proprietor would draw for his personal use. So amount of drawing to be added to the closing capital. Because if there would not be any drawing, closing capital would be more. Then depreciation should be recorded in the statement of profit loss. Another item, depreciation. It should be recorded. After calculating the profit, depreciation should be deducted. That is, it should be, depreciation should be recorded in statement of profit. Statement of profit. That we will calculate later on. After calculating the net profit from closing capital and opening capital and drawing and additional capital. So additional capital will deduct as additional capital. Then we will get the adjusted closing capital. From adjusted closing capital, we will deduct the opening capital. The capital at the beginning of the year, we will calculate the net profit. After getting the net profit, we will prepare a statement of profit or loss. From statement of profit or loss, we will debit or will minus depreciation on fixed assets. So amount of depreciation charged against profit loss is to be deducted. Then bad debt. Bad debt is also to be charged to profit loss. It is also to be recovered from profit loss. The debts which are not recovered from debtor is called bad debt, hence it should be deducted in the statement of profit loss. So from profit loss, these are the deductions. Past depreciation, then bad debt, then reserve for bad and doubtful debt. It is to be deducted. These are the charges from on profit and loss account. A reserve for bad and doubtful debts. Then undervaluation and overvaluation some assets, and that I will discuss. Undervaluation or overvaluation of assets and liabilities. What is that? In the books of account, value of asset is undervalued. So that the asset should be increased by the amount of undervaluation to bring it proper value. Undervaluation means lower capital required to adjust added to the statement of profit. So undervaluation of assets will be added to the statement of profit, and overvaluation of liabilities, that is overvaluation of liability, should be deducted. Undervaluation of assets should be added, and also overvaluation of assets should be deducted because it is valued. The asset is already overvalued. Assets should be decreased by the amount of overvaluation, so less. So what we will write? We will write here: add undervaluation of assets. Undervaluation of assets less overvaluation of asset. When asset is overvalued, then profit is more increased. So we have to deduct overvaluation of assets. We have to subtract. Then undervaluation of liability to be deducted. Less undervaluation of liability. Whatever actual liability we should less. As a result, profit is increased. So we have to less it, deduct it. Undervaluation of liabilities. This is the reverse of asset. Then add the overvaluation of liabilities. Overvaluation of liability means the net profit decrease. So we have to adjust. Add overvaluation of liabilities. These are the most important item. One is undervaluation of asset. It should be added because when the value of asset is undervalued, the net profit is decreased. So we add it. Then in case of overvaluation asset, the net profit will be increased. So we have to subtract it from statement of profit loss account. Then undervaluation liability, the liability has been shown less. As a result, the profit is more, so it should be deducted. Overvaluation of liability means our net profit is shown at a lower rate, so then the actual, so it should be added. These are the four important items. Then interest on loan should be deducted. That you know, interest deduction, interest on loan. So interest on loan should be deducted, but interest on drawing should be added, because interest on drawing is the income of the business. Interest on loan is the liability of the expenditure of the business. So interest on drawing. Here we will add interest on loan or interest on capital also will add it. We will deduct from the profit loss statement. We have to deduct interest on loan or interest on capital, but we have to add interest on drawing. For example, opening capital is given. Suppose we have to solve something. Opening capital is given, that is as on 31st March, as on 31st March 2017, opening capital is given, suppose 1,50,000. Then additional capital introduced during the year, additional capital introduced during the year to be subtracted, because if the capital has not been, this is to be additional capital introduced during the year should be subtracted or less. Then on 1st October, additional capital introduced on 1st October during the year, means on introduced on 1st October 2017, it is suppose 40,000. Then rate of interest, suppose 10%. Rate of interest 10%. So interest on capital will calculate. We will calculate interest on capital. Interest on capital. How much is the opening capital? That is 1,50,000. It will for 1 year at the rate of 10% means 15,000. Then on 40,000, 10%, 4,000, it is for 6 months. 1st October to 31st March, 6 months. So it is 4,000, 10%, that is 2,000. So total is 17,000. Total amount of interest on capital 17,000. It will be deducted while preparing the statement of profit loss from net profit. Then interest on drawing, I already told, it is to be added to increase the profit. Outstanding expenses, unpaid expenses. So any outstanding or unpaid expenses, as a result the profit is more, so it is to be subtracted. Less outstanding expenses, another, and in unexpired income received in advance, or unexpired income received in advance to be subtracted. Then add should be prepaid expenses. Prepaid expenses and accrued income. Accrued income. This is all about the add. Then subtraction is expenses losses during the accounting year, that is interest on capital, interest on bank loan, bad debt, provision for bad and doubtful debt, depreciation on fixed asset, overvaluation of asset, that is decrease in the value of asset, decrease in the value of asset, that is overvaluation of asset, undervaluation liability, increase in the value of asset. Then outstanding expenses, income received in advance. So we will calculate accordingly. It is given Mr. Manoj keeps his books under single entry system. Give the following information. Capital as on 31st March 2017 80,000. Capital as on 31st March 2028 1 lakh. Drawing made during the year 3,000. Additional capital entered during the year 8,000. Calculate profit loss. First, we will calculate the statement of profit loss for the year ended 31st March 2018. So closing capital, that is capital at the end of the year was given 1 lakh. Then at the drawing 3,000, 1 lakh 3,000 less additional capital entered during year 8,000. So it is 95,000. So this is adjusted closing capital. Opening capital was 80,000. So net profit for the year is 15,000. It is very easy for calculation. Then suppose one problem is given, that we will discuss. So we have to discuss all the important problems. For conversion method, we will take another video or we will prepare another video. This is the statement of affairs method which is covered in the +2 second year commerce student course and also BCom course. So Arjun keeps his books under single system. Arjun keeps his books under single entry system. His assets and liability was under. His assets and liabilities were as under. So particulars, opening date, closing dates. Particulars, then as on 31st March 17, as on 31st March 2018. So first item is given cash. Here it is 1,500 given. Here it is 1,000 given. Then sundry debtors. It is given 30,000 opening date. Then closing given 46,000. Then stock. It is given 35,000. Here it is given 31,000. Then plant and machinery. It is given 61,000. Here it is given 75,000. Then sundry creditors. It is given 15,000. It is given 13,500. Bills payable. First opening date it was not there. Bills payable is nil on the opening date and closing date it is 4,000. This is given under asset liability. Then at the end the additional is given during 2017-18, that is 1st April 2017 to 31st March 2018, he introduced, means additional capital introduced, which should be subtracted. Introduced rupees 15,000 as additional capital. He withdrew, that is drawing, which is to be added. He withdrew rupees 2,500 every month into 12. Every month. So this is 2,500 into 12. 30,000. Drawing is 30,000. For his private purpose, it is drawing. For his private purpose. So ascertain profit loss account. Ascertain profit or loss for the period ended 31st March 2018. So it is this we have to calculate. See here. So first you have to calculate the opening statement of affairs. Statement of affairs as on 31st March 2017, or we can write 1st April, nothing to worry. So here particulars, assets, then here we write particulars, liability, particulars, asset. This is particulars, this is liabilities, this is particulars, this is assets. So under opening asset it is given cash. So we write cash 1500 is given. Then sundry debtors, it is given 30,000. So 30,000 given. Then stock 35,000 given. Stock 35,000 given. Then plant and machinery 61,000. Then under liability, sundry creditor is given almost 15,000. So opening capital we have to calculate. We will follow the accounting equation. Asset is equal to liability plus capital, or asset is given, liability given, asset minus liability is equal to capital. So asset side total is here 500, then 7, then 1,27,500. Here it is only 15,000. So capital, that is balancing period at the beginning of the year, that is balancing figure 1,12,500. So opening capital you calculated 1,12,500. Similarly, you have to calculate the closing capital. Closing statement of here on closing date as on 18. So here under liability side we write sundry creditors 13,500, then bills payable 4,000. Then asset side write cash amount is 1,000. Then sundry debtors amount is 46,000. Then stock 31,000. Then plant and machinery 75,000. This is all 1,000, 46,000, 31,000, 78,000 total. So asset total is 1,53,000. So the closing capital, that is capital at the end of the year, that is balancing year, asset minus liability. Liability 17,500. So capital is a balancing figure. So 1,50,000 minus 17,500. 1,53,000. Then we will deduct 17,500. So balance capital is 500. Then 531. 1,35,500. 1,35,500. So we have to prepare a statement of profit loss. How much we got? 1,53,000 minus 17,500. Here it is 500 then 5 1,35,500 1,35,500. So we will prepare a statement of profit and loss. Loss as on 31st March 2018. So we write closing capital. It is 1,35,500. Closing capital 1,35,500. Then add a drawing. So it is given, drawing per month is given. It is 2,500 per month. So per year it is 30,000. So drawing will be added here. So amount is 500,561 less additional capital introduced this year 15,000 less additional capital introduced during the year. The amount is 15,000 less. So adjusted closing capital, that is adjusted capital at the end. Adjusted capital will got how much? 1,50,500. Then we'll deduct opening capital less opening capital 1,12,500. Opening capital 1,12,500. So net profit is 48,000. This is all about one problem. It is 1,35,500 plus 30,000, 1,65,000 minus 15,000, 1,50,000 minus 1,12,000. It is 38,000. Net profit is 38,000. Then we will solve another problem where more adjustments are given. Some item of expenditure is also given. That we have to calculate. So from the book we will solve. Here Mr. Murwa keeps his books on singular system with the following information. On 31st March 2017, cash at bank will take on opening statement of affairs asset, sundry debtor 28,000 asset, stock in trade 20,000 asset, furniture 30,000 asset, machinery 60,000 asset. So asset total on the opening is here it is 5. Then 5,000. It is 1,45,000. Then liability is given, bills payable 4,000, sundry debtor 10,000, then bank loan 4,300. It is 18,300. 18,300. So opening capital is how much? That will calculate the statement of affairs on the opening date. So opening capital is how much? It is 700. Then 1 lakh 26,700. Similarly, we will calculate the closing capital as on 31st March 2018. So cash at bank is given 40,000. Then sundry debtor is given 42,000. Then stock is given 35,000. Stock in trade 35,000. Then furniture is given 30,000. Then machinery is given 60,000. Other three are liability: bills payable, sundry debtor, bank loan. So we will total the asset side at the closing date. This is 2,07,000. So 2,07,000 less liability. Liability given 4,000. That is bills payable, sundry debtor 15,000. Then bank loan 4,300. So total liability comes to, it is 23,300. So closing capital is this much. Closing capital 700,381, 1,83,600. Then it is given some additional information. Mr. Muria withdraw from his business 6,000 for personal use. That is, drawing is given 6,000. Then introduce additional capital, that is 30,000. Additional capital 30,000. Depreciation is charged 10% on depreciation on furniture and machinery, 10%. This we have to calculate. So we have to calculate the statement of profit and loss. Statement of profit or loss for the year ended. For the year ending 31st March 2018, it is given. So what we will do? So we will do like this. Closing capital or capital at the end of the year. Closing capital is given 1,83,700. At a drawing is given 6,000. 6,000 added. That is 700. Then 1,77,700 less additional capital. Amount is 30,000. So adjusted capital at the end. Adjusted capital at the end. How much? 1,47,700. Then we have to charge depreciation, less expenses, profit for the year before. This is profit less opening capital. So amount is, opening was 1,26,700. 1,26,700. So profit for the year before adjustment we got. Profit for the